Revant, tell me a stock which will double. I've been hearing it for long. So initially I used to just laugh it off. Then I said no. I said, yeah, I know a stock which will double, but from which level it will double, I don't know. Like it's $10, it can go to 2 rupees and then 4 rupees. That's also doubling.
Unicorn is a company which is valued over $1 billion, and if
Right.
it's like a couple of years old, and
Right.
India has crossed. So some people are celebrating that, like for example, Oyo and Paytm and or Nykaa, CoinDCX, all of
Right.
them. And then now, slowly now we're getting news that a lot of it is a fugazi. It's just up in the air. It'll always
There's
stay.
limited amount of wealth. So everyone cannot be wealthy. Indian stock markets, financial markets, are actually very, very safe.
Right.
So we have a very good infrastructure in terms of investor protection.
There is so much talk about cryptocurrencies now.
Right.
And a lot of people are so interested in cryptocurrencies and what they are, and a lot of people are investing. There's so many digital platforms that you can invest in.
Right.
In your opinion, what is the stark differences between cryptocurrency and the market?
We've seen recessions in our lifetime. We've seen
Right.
a lot of recessions where suddenly the stock market just plummets.
Right.
Which has hit you really deep down inside? One memorable recession.
So 2008.
2008.
Is
When do you sell? When do you decide I want to sell this?
when I need the money. If I'm buying something
Okay,
else,
it's not like you've lost faith in that company.
you have to be a good person. So a lot of it, actually, or at least some of it. Dude, now if you're an unlucky guy,
Yeah.
it can be the best idea. It can be the best time.
But wrong.
You are just bloody that unlucky
Yeah.
that it won't work. So now you have to be a good person. Some luck will also come your.
The craziest thing about the stock market is since 2019, the number of demat accounts has doubled, especially in India. I think it's because of COVID or whatever, people boredom or people realizing how good the stock market is.
I don't think it's because of boredom, but I think people are sitting at home and don't know what to do. How do you make money? Like, you're sitting at home, there's money in your account, and there's no work outside. So what do you do? Like, I think make money in the stock market. I think that's the reason. But what do you think? Like, how would you?
Yeah, so that's actually quite an interesting trend. Reason being that there are two factors to it. One, of course, was COVID, and two was actually in terms of how financial technology and technology in general just exploded post COVID. When earlier people before COVID, you had the option of going to the bank or going to your broker or basically there was physical interaction and presence, but COVID kind of reduced that or made that zero for months on end.
Okay.
So what ended up happening was that people were forced to be at home. The good thing of those 2 months was no one was spending money. At least I wasn't. I live with my parents. I still don't spend any money. So what happened is that you had like especially corporates and salaried employees. Of course, you had a push from the government as well saying, don't cut salaries. You're screwed, but don't cut any salaries. So I think what did happen is people were at home. Their salaries were coming in.
Yeah.
And you ended up saving more. So
Sure.
with technology kind of kicking in as well at that point in time, which was always there earlier, I agree with the bit of what both of you said, that boredom for sure. Two is, even if you're bored, like there are a lot of people bored, but if you don't have money, you can't do anything.
Exactly.
So it was boredom along with funds that were available because there was no way to spend it. What would you spend it on back then?
But one thing to understand, so statistically, India is only like 2% or less than 2% of our population has a demat account.
Right.
A lot of people, like India's investing ways was always either buy gold or buy land. Why would
Right.
someone want to get into the stock market? Isn't it like gambling?
Over there, look again. So in terms of demat accounts is basically a mode. It's an electronic mode to hold securities. So I would think that in the 90s it wasn't mandatory, and then towards the end of the 90s is when it kind of kicked off, where there was encouragement to have demat. Today you have to have a demat. There's no way you can buy securities or hold anything if you do not have a demat account. In terms of penetration, depends on where, who are we comparing ourselves to? So if you're comparing yourselves to, say, America, so in America, you have forced savings or pension plans that are there, which for years and decades, people have had the option where, it's a structural investment where, you have the option out of your salary and X amount goes into your retirement fund or your pension planning.
So in America, so as
Though
India is 2%,
we-
China is 7% of
Right.
its population is into stock market.
Right.
USA is into 40%. So someone was saying
Right.
if more and more of Indians start getting into the stock market, there's more liquid investment for our companies to play with. That can be
Right.
the next boom for India. Actually, is if more and more people open.
My
it.
question is that what is this, like you said, like America has these pension funds and things
Right.
like that. So all of these provident fund in India and all, is it not the same? Like is
No. So in terms of provident fund, that's basically or what is popularly known as PF.
Yeah.
So the investments which were traditionally made in provident funds were probably in your longer term government securities. Those were bonds, fixed coupon carrying bonds.
Right.
It wasn't really in equities at all.
Sure.
What has changed post that with your national pension scheme or NPS is now you can save up to 50,000. My numbers may be a little off, but up to 50,000 is what you can save where you get a tax benefit. And now that kind of goes into equities or a part of it goes into equities. This wasn't there, 7, 8, 10 years ago.
Right.
So, and also a lot of government employees, your state pensions and your central pensions,
Right.
you do have the option now of basically investing in the secondary markets or investing in equities where, you would have a fund manager or a company which kind of multiple companies which have these products. And now a portion of your savings of your, of what you earn definitely is going into the stock market. So where, picking up from your question in terms of liquidity, is that going to be the next boom? So what has happened, and we're almost ending May. So typically in the Indian stock markets, there are three kind of participants broadly. So one would be your foreign institutions. Two would be your domestic institutions. That's LIC and
Yep.
your domestic mutual funds. And three would be retail. So what has happened, and this is 1 month where the foreign inflows have actually been quite bad. It's been disastrous. So I checked today, and as of yesterday, just for the month of May, it is negative 46,000 crores. So to put that in perspective, the last time it got this bad was in March of 2020 during COVID.
This is the liquidity of. No.
They've pulled out. So
They've pulled
say
out.
yeah. So say if I'm a foreign institution. I'm buying for 1,000 crores today. I'm selling for 2,000 crores as well because there are multiple institutions. So the net figure has been a net negative of 46,000 crores for the month of May.
Oh.
And
That's
if
why we see that market dipping. You feel that's one of
that's
the big
one of the
reasons?
reasons why the market has dipped. So I think we've dipped probably 10% in
Yes.
May, a little less than 10% in May. However, it could have been way worse.
Yeah.
So from what he said is it's your domestic liquidity, that's mutual funds and, a little bit of these pension funds and
Sure.
SIPs, which is again via mutual funds,
Sure.
which is kind of giving some sort of a base to the market. Now, what most people think is that, this is what is going to cause the market to explode or go up. So I think a little differently. I think firstly it's very good. So I'm in the business and I'm very happy when people invest and
course.
they put money in SIPs and things like that. That's great. However, fundamentally what we should understand is everyone can't become rich at the same time. It's just not possible. There's
The same amount of winners and losers will always.
there's
stay.
limited amount of wealth.
Right.
So everyone cannot be wealthy.
Yes.
It can be during some period of time or an extended period of time like what has happened right now, 7, 8 years, that whenever you've put in money, now not into some penny stocks, but if you put in money into the index or you put in money into, diversified mutual funds, any time in the last 7, 8 years, barring the last 6 months to a year where you've put in money, you've made money, which means what's happening is everyone is winning.
Yes.
Logically, think about it.
not
That's not
possible.
possible.
Yeah.
And not only in equities, in any asset class.
So you say we're getting into a slight bubble. Or we already
Slight,
in one?
yeah,
No, I don't think it's a
slight bubble
That
is
is an understatement.
yeah, in my opinion. I can obviously be wrong, but like things like inflows and I track that quite closely, and it's been phenomenal. Like the kind of inflows that domestic institutions, which is mutual funds, have seen in the last 2 years. It's an industry. So before COVID, I was looking at it because I'm a part of the industry, and I think there was obscene growth. It was like 28-30%.
Wow,
And
that's
before,
insane,
year on year for the 5 years prior to that. And I was thinking that, man, should I look at diversifying? Because what what kind of went through my head is that there's no way you can have this kind of growth perpetually. And then what happened is COVID happened, and you kind of got the second buying spree where the industry has again grown in the last 2 years. So if we now look at the last 7 years, we are talking about a 30% growth in terms of inflows.
Raven, just before we get really deep into
Right.
this, and we have a lot of questions, for the average person, because a lot of people in our friend circle also, a lot of them don't have demat accounts or are even getting into the stock market. Why should they get into the stock market?
Correct.
Are you asking why they don't have demat
No,
accounts?
no, why should somebody
Why
get
should
into,
someone get
Right,
it?
right. Why should they get into the market?
why should they get into market?
So, firstly, I don't believe that everyone should get into the markets. I don't think that that's the case. So, a lot of wealth managers and a lot of asset managers, they come up with these rules that if you're young, you should invest in equities. No, man. If I'm young and I'm rich and all my objectives are achieved, why should I invest in equities? I'll just invest in something which is which is safe.
What is
And-
safe?
Land.
So real estate is one aspect which traditionally has been
No, but
safe.
for the average 20-year-old, he's not buying land. He doesn't have the
Correct,
liquidity to buy
Correct,
that sort of
correct.
land.
So if we are talking about the average youngster, that is average below 40, who is not sitting on piles of wealth and who's looking at wealth creation,
Yeah.
definitely I think that they don't have a choice. They have to be in equities. They have to take the risk because if you're going into traditional products, you're not going to make more than you're going to beat inflation maximum by around 1% or 2%
So yeah,
tops.
it's like the money which you have in your savings account is just rotting over
Yeah,
there.
definitely.
The inflation
Yeah.
is eating it up.
Is eating it up. Yes, inflation is eating it up, and going forward in a country like India, which obviously is growing, and when you are growing at the pace we are expected to grow, there is bound to be inflation. And if you have your money sitting in a savings bank account, the bank is making money. You're not making money. Effectively, you're losing money. So towards youngsters who are looking at saving and in order to achieve their financial goals, I don't even talk to them about like risk appetite and things like that. I just tell them, boss, option nahi hai, boss. What can you
have
do?
to kind of-
Now market, whatever it may be, what option do you have? You have to, your money has to grow at 10-12% plus for you to achieve your objectives. You want to buy a house in 12 years, 15 years. I look at the run rate required. Your run rate required with how much you earn is coming to around 12-13%. What option do you have? You don't have any option. You have to invest in
So
equities.
if someone's getting into the stock market,
Right.
should they play short or should they play long? Should they go for the blue chips, which is like the bigger companies, just like Ambani, Reliance, etc.,
Right.
or should they go for the penny
I
stocks?
think if there's someone who's thinking of getting into the stock markets, I feel that the right way for them to get experienced or gain some experience is do it via mutual funds. So why I say mutual funds over PMSs and structures and things like that is the ticket size is lower in mutual funds. So mutual funds you literally can start off with $5,000
Okay.
and either via SIP where you do
So
it
mutual
monthly.
fund is basically a pool of different funds. You don't know what's it invested in. You're just
You know
you're
what it's
safeguarding
invested.
yourself with the
So
diversity.
you know what it is, but I don't know. A lot of people are paying attention to
Right.
what it is because you trust the
fund manager.
institution or the fund manager, or whatever you invest.
So
in.
mutual funds are actually one of the simplest retail-oriented products that we have in the country. So a mutual fund, to put it, I'll try making it as simple as possible. It's a financial product. It is not an asset class. It's not equity, debt, or real estate. It's a financial product which invests in different asset classes.
Okay.
So if I'm a safe investor, I would look at a debt mutual fund. It invests in bearing securities like an FD. Like it's a substitute to an FD with better taxation. I want to play it safe. I'll go with a debt mutual fund. you have equities. That is, obviously, equity mutual funds invest in equities. So why I say mutual funds are, the best for someone who wants to experience the market or who wants to start investing and for the long term is, one is, these guys have been around. Most of them have been around for 2.5, 3 decades. So they've seen the dot-com bubble, they've seen the World Trade Center go down, they've seen the Iraq War, they've seen Goldman, they've seen 2013 currency crisis, they've seen 2018 taper tantrums, they've seen 2020 COVID. So we've seen these fund managers, these funds in the last 2.5 decades have seen 8 large-scale events.
Yeah.
And if you look at their returns over the 25-year period, you will see that they have outperformed. Of course, they've outperformed traditional, FDs and things like that. They've also outperformed the index, which is the Sensex or the Nifty. They've outperformed them quite significantly. Now, I would never put this as a pitch for someone to invest for the next 25 years because you're not going to make that much money in the next 25 years. When your market
Why
is
not?
your market is smaller, usually your information is lesser, the risk you're taking is more. So when someone invested in 95, the risk they took is way higher than someone investing in 2020. There was no online availability of any balance sheets
Information
or
was
any.
less.
There was no information. To a large extent, it was your gut and your hard work in terms of what stocks you're picking or what funds you're picking. Also, a smaller market, which we were very small and we've grown in the last
Yeah, it's
20
ridiculous. In 98, a Sensex was 5,000 and today it's 53,000.
Essentially, what he's saying is that when you risk your money in the market, then it was more a gamble than it is now.
Correct.
You know, like
Now now the same information you have, everyone else has.
exactly.
But do you see a Sensex growing to 100K?
Eventually, yeah. So
Okay,
I
but
think,
like 10 years, like the rate it's going.
yeah. So
I mean, that's basic arithmetic, right? Like, it doesn't. I mean,
Correct.
over a period of time, it will grow to 100K. Like, if
Correct.
it does
So
not,
where-
then we are not performing.
if
as
we are
an
talking
economy.
about India, yes.
Yeah.
If your question is Indian equities, yes. I do think that even though we are expensive, we were way more expensive 6 months ago, but we are still very expensive. We are the most expensive, one of the most expensive markets in the world. However, if we look at growth, growth is non-existent in the West. So if we look at, I would actually put it post Lehman, that's 2008, and quantitative easing and the central bank, what I call 2008 to 2021 is the central bank bull market rally. That is basically central banks put together, just had very favorable monetary policy, zero close to zero, pumped a lot of money in to support the economy.
The Indian Central Bank.
All the central banks
All
across the
central
world.
banks, okay.
Everyone combined. India was actually much lower. We
didn't get
we didn't
affected
have
that
the
much.
luxury. We didn't have the luxury to do that. But in the West, starting with Japan, obviously in the 90s, and then America 2008, 9, Europe, and they have been pumping the markets with liquidity for 12, 13 years.
But how does that work, though? Like, I mean, like, there is not an unlimited supply of money.
If you're printing it, there
Yeah,
is.
exactly, right? Like,
Yeah.
so then doesn't that devalue what you're doing?
Everyone is printing.
Yeah,
So
yeah.
what it should devalue it against
Yeah.
is actually inflation hedges. So say gold. It
Yeah.
should devalue your fiat currency. So if America is printing, Japan is printing, Europe is printing,
Yeah,
they may be trading at the same level against each other.
yeah.
But what they trade against gold, that should definitely show, which is not showing.
How is that?
So it's if you ask me, I'm saying go buy gold.
though? Yeah, exactly.
You may not.
So gold has been outperforming stocks?
No, gold has been underperforming. Again, gold is denominated in US dollars, so you have an Indian peg to it when you compare it to the rupee. The interesting part with gold is that gold from 2012 onwards, in dollar terms, has been around $1,800, $1,900, which is the same even now. So it's $1,800 to $1,900. The only thing is the rupee in 2008 was 40 at its peak. 2012 it would have probably been 50, 55.
No, it's
Today the
70,
rupee is 80.
Yeah.
So the returns I've got on gold from 2012 to 22 is because of the rupee depreciating.
Yeah.
And overall, the rupee, a safe bet is it's going to depreciate 4% year on year against the dollar every year. That's a safe bet. It's just inflation over there versus inflation over here. And
But what makes these stock markets? What I've been seeing, I've been into stocks for the last 7-8 years.
Right.
And what I've mainly seen is it's always headlines which spooks the market. It's always mass hysteria or like the CEO got caught in some scandal. Even though it has nothing to do with the company, but the CEO got caught or some bad press came and suddenly the stock just tanks. Why is it? It's a lot of you're dealing with mob mentality rather than actual financial P&L accounts or in the performance of the
Because everybody
companies.
doesn't have that information, right? Like I don't think that everybody's looking at it. They are like, oh, everyone's selling, let me also sell. That is the thought process
So
for.
it's herd mentality. It
Yeah.
also depends on which companies we are talking about. So, for example, I'll give you, was it 2018 or 19? There was some whistleblower in Infosys, which came out with alleging that Infosys corporate governance at Infosys has been compromised. It didn't fall. It fell around 7% or 10%, I remember, and then it kind of moved back and it doubled.
Like the Adani power thing
Right.
recently. I had bought Adani at 101 and
Right.
was going to 200. And then
Right.
suddenly the scandal came out where I'm not sure what it was a scandal where it just dropped from 200 to 70.
You're
And
talking
now,
about last year?
just recently, like
Yeah.
5-6 months ago, and now Adani is back up to
It's back up.
300.
Yeah. So
So-
the Adani information, which I think you're referring to, is probably 6 months to a year ago, where the allegation again was that they are investing, or the promoters are basically diverting funds overseas, and it's their funds which are taking the shape of a foreign institution, which is they are basically creating a foreign institution to invest back into their own holding companies. So when
Just going round and round.
yes, it's basically masking the identity of the money, where
They
it's
found a
shown-
loophole and they exploited
yeah,
it.
yeah. So that again, that is the allegation. And what did happen is you had your Adani Group companies correcting 40% in a month, and post that, yeah, as you said, it just kind of bounced back. So again, commenting on stocks is very difficult, and to be honest, I'm not, I'm not qualified enough to comment on stocks. But something like this, I would have a red flag on it. I wouldn't, not that I know much what's going to happen, but if you were to ask me, would I put any money in Adani Group stocks? I wouldn't.
You would not.
I would not.
Even though he's like the richest Asian, right?
Yeah, and if
And
and
he's the richest Asian in debt, right? Like it's all debt. Like,
Yeah.
It's not. I mean, like if
Like,
Reliance
he's
is
almost $200 billion.
yeah, but like Reliance is not a debt-based company. They are, I think, one of the biggest cash-rich companies.
yeah. So Reliance raises money at the right time. So when Reliance goes into the market to raise equity, it's actually an old saying in Bombay, because I spent a lot of time there, is when Reliance is going to raise money in equity and they're not raising debt, it means that the rates are going to remain low for a very long period of time. When Reliance goes to the market to raise debt, it means that the rates are going to go up very quickly. So Reliance overall in COVID, or when they raised that
Yeah.
all that amount of money, you had interest rates across the world coming down for the next 2 years. So they basically raised equity, cleared off all their debts.
That's-
They were a zero debt company.
There you
And now again, they're going to take all their debts, or maybe not all of it. But you have to, in order to grow, and all of these guys have to grow, there has to be a portion of debt. The only industries which really, and these are the industries I love, pharmaceuticals,
Yeah.
FMCG once you've hit scale,
Yeah.
technology.
Yeah.
These are companies which potentially they're
Could be
cash
debt-free,
cows.
yeah.
They do not need to borrow money. If you've hit that scale, just through the money that you get in cash flows, firstly, they are highly profitable companies. What they'll end up doing is distribute dividends and grow with what they're not distributing in terms of dividends. And it's a fairy tale. It's just an organic, great growth story. Yeah, the only thing with the Indian tech now, suddenly in the last 1.5, 2 years post COVID, even Indian tech has become sexy and glamorous. Absolutely, I don't understand why.
Yeah, with this unicorns,
So-
India, like a unicorn is a company
1
which
billion.
is valued over $1 billion, and if
Right.
it's like a couple of years old, and India has crossed. So some people are celebrating that, like for example, Oyo and Paytm and or Nika,
CoinDCX.
CoinDCX, all of them. And then now, slowly now we're getting news that a lot of it is a fugazi. It's just up in the air.
That's what
you know?
that's what's going to be my next question. It was like I watched this movie called The Wolf of Wall Street, and then
Right.
the guy is there sitting there. He's like, I don't know if the money's market is going to go up or down. So
No one
how
knows.
much of it is a fugazi? Like what?
Over there, look again. So it depends on the participant. So Wolf of Wall Street, we are talking about a stockbroker. I think in the 90s
Yes.
over there, maybe earlier. So stockbrokers even today, bankers even today, and this is what I advise people to do, not, come to me and invest with me, or I'll, come on board, I'll manage your money. No, not at all. But what I do try telling people and friends or anyone who does ask me is always understand the guy you're going to, what's in it for him.
Yeah.
So a stockbroker today, I have a stockbroking infrastructure, and I would say that I actually put it out quite honestly to people is I'm providing you the infrastructure for cheap rates. If you ask me what's going to go up, I don't know.
Yeah.
What's going to go down, I don't know.
Yeah.
Because you want to trade, I'm giving it to you at a cheaper rate.
Right.
Now, when someone tells you that, this is going to go up,
Yeah.
what you have to understand is every time you buy
Yeah.
and every time you sell, every time you make a transaction,
Yeah.
he's making money.
Right.
So
Commission.
it's clearly in his interest
Yes.
to kind of make you repeat these transactions with different stocks. Whenever you transact, he makes money.
Right. Yes.
So it's completely in his interest to churn, be short term, tell you that this is going to go up. How does he know?
Basic sales.
Yeah, how does he know?
Yeah.
My point is, if you work, in a brokerage house and you're a dealer,
Yeah.
boss, if you know so much,
Yeah.
why the hell are you a dealer?
Exactly.
Like, do it for yourself and make money for yourself. Why are you making the world rich? Make yourself rich first. So, it may be a pessimistic attitude, but I do think that more often than not, if, people do go in for these quote unquote tips and things like that, it's always, once the market cycle turns, it's not a very good ending.
Every year, is there like a cyclical trend to the market? Like, for example, summer comes, so suddenly certain electronics like air conditioning and all, they're more in demand. Does that sort of thing happen? Or
Not really. So,
like electricity prices shoot up, or
It's a myth.
Does retail affect it basically?
it's a myth. So I'll tell you the myths that I've grown up with.
Oh, okay.
Gold goes up.
This is interesting.
Yeah. So,
Okay. Myth number one.
myth number one is gold goes up during Diwali. Bullshit. Bullshit. Diwali is not celebrated anywhere else apart from India. Probably in Fiji it's celebrated. But apart from these two places, I don't think it's really celebrated.
Myth number two.
So, myth number two is when you get your call wrong, or if something is going to go up, they are saying it'll go up. Who is the they? No one has ever
The
said.
gossip circle.
Yeah, the they. It's always a they. So, yeah, to start off, these are the two, like, top of my head. So, coming back to the gold thing, because that's what I think, most people would relate to. Again, like we said earlier, gold is an international commodity. The prices are not determined by Diwali. Yes, the prices of patakas, yes, that will be higher during Diwali.
Poker dealers.
So that will be high during Diwali. Not
If
the,
they get that in the government previews, how much money is gonna
Yeah, so all-
make betting
so
legal.
again, interesting point. Should you make it legal? Yeah, government, if they can earn revenue off, off streams where which is already happening, but it's
People are
unregulated.
yeah, exactly. It's unregulated. People are still doing it. It's Dream 11.
Yeah, yeah. So that's actually a very
It's the
polished
biggest-
way of
yeah, it's a
doing it,
yeah.
but that's what they're doing.
No,
And
but like it's advertised. It's
Right.
on TV. It's essentially betting.
right.
And I was going through this. I was reading about it, and then what it is that it's so weird that like you can't bet on cricket as a game, but you can bet on it as a skill. It's a,
So it's a loophole.
yeah, it's such a big loophole that
Yeah.
is.
It's a loophole.
Like, for example, poker is a skill game, so
Yeah.
it's not betting. So that there are some ways that you can legalize
Yeah,
it.
exactly.
Rummy
So you can't bet
example
on the
as
game,
well.
but you can bet on the skill. It's really weird. So but you're actually betting on the game only, but it's a skill. So it's one of the biggest loopholes that I've seen.
It is. It's optics. It's when you understand it. So, for example, in the West, like,
Everything goes.
if you're anywhere, so I can say if you're in London, you'll see like three gaming sites, or where they do accept bets, where it's proper, it's regulated, you pay money, you get a receipt, there is tax which is being paid on it,
Right.
very open, it's done.
Yeah.
And of course, they do, in terms of malpractices that do exist, match fixing, etc.
Yeah.
You have the government authorities, or you have some authority which looks into that. So it's kind of regulated.
Yeah.
Vegas, if you look at the gambling industry, which if we are talking about Las Vegas, Nevada, over there, it apart from the gambling, which is thriving, the legal system is thriving over there.
Yeah.
Like in terms of, gaming lawyers or gaming law,
Correct.
it is very well regulated.
Yes.
So over here, I think where we can't really accept it for good or bad, and it depends. It's person to person.
It's happening. It's happening out in the open now.
It is.
It's not. It's not like it's hidden.
Right.
All the biggest players are doing it.
Right.
And I still don't understand why that we have not amended those laws which were made in like 1890s or something like that.
They
Like,
could. It's a good stream. It's a good stream for the government to kind of increase revenue. So it's happening offshore in Goa. They have some ships which it's allowed on the land. It's allowed. I don't know the complications to it.
Yeah, it's not
But-
allowed on land. It's allowed in the
Which
sea.
is
It's
which
international
is like
waters as
which is
well.
like 2 meters away from the land. But now they've taxed that. If I'm not mistaken, there's a GST and a tax which has come on casinos in Goa.
Yeah.
I think that'll be replicated across the board. So over there, I think there are multiple ways how you dissuade people from vices or gambling. Is Singapore, for example, I think there's a very, very high entry fee. There are some countries where if there are casinos, you're not allowed as a local to go there. Make those kind of rules great.
But what happens to society is as a result.
That
what
don't
they're
allow the
worried.
locals. Don't allow the locals.
there is so much talk about cryptocurrencies now.
Right.
And a lot of people are so interested in cryptocurrencies and what they are, and a lot of people are investing. There's so many digital platforms that you can invest in.
Right.
In your opinion, what is the stark differences between cryptocurrency and the market? Like, just the simplest ones.
Yeah. So again, in terms of crypto, I don't think anyone is an expert at crypto. I'm definitely not an expert at crypto, but to say a couple of differences between cryptocurrencies and equities, if that's what we are referring to. So, if you're investing in equities, you're basically investing in a company where you have access. It's public access to see the results, to see how well the company is doing, how many people they have employed, what are their assets, what are their liabilities, etc. To form a judgment into whether the company is doing well or company is doing badly, and what is the price of the company.
Right.
And how much is it earning? So
Right.
price by earnings is typically a metric that people use.
Sure.
Now, when it comes to cryptocurrency, what I understand from cryptocurrency is definitely it's a tech enabler. I do see that in the future there is a lot of utility
Yeah.
of the technology, or what is widely used or widely called is blockchain.
Right.
And I do see a lot of utility which will come up over the next 10 years or next 20 years. The only issue is how does one value it? Equity, you can value it. Their earnings, there's a price it trades at.
Correct.
Over here, there's no way to really value it.
Yeah.
So
Yeah.
that I feel is the biggest difference. So say for example, and I may be wrong with my numbers, but say a year ago, the fixed cost or the variable cost, if you were to mine one Bitcoin, which is, I would think, the benchmark of cryptocurrency, or that's
Right.
the biggest in terms of market cap, it was costing around $10,000 to $12,000 to mine one Bitcoin. I may be a little wrong with my number today, but I remember a year ago it was that much. And Bit was trading probably between 40 to 50,000.
Right.
My question is that on what basis is it trading?
Yeah.
Like the other coins, like if you look at Ethereum or you look at, I think, Solana, they have acceptability. Like in terms of NFTs, it's the underlying currency for
Correct.
that.
Yeah.
It's also, again, I may be wrong. I'm not like a tech genius, but this is all from whatever I read. So you have these coins which are used in terms of purchasing other digital assets.
Right.
But when you talk about Bitcoin, it's not as frequently used. What people think of Bitcoin, or what you hear a lot of people saying, is it's a hedge against inflation. It's digital gold. It's not digital gold, boss.
But
It's not.
the funny thing is that the youth today in the early 20s,
Right.
they're looking at the stock market like, this is a
Right.
passe thing.
Yeah.
It's cryptos, where's it at? So it's like almost a competing segment. And like we had Rohan also who had come, and he was talking about this as to where does the valuation come. He was saying that a lot of it is based on the amount of liquidity and how much of transactions are taking place in that
Correct.
ecosystem of Ethereum, Cardano,
Proof
Solana.
of work and proof of stake.
Yes,
and
yes.
He
No,
said a lot.
So a lot was there in that particular aspect. It's very
Right.
interesting. Revant, I wanted to get you one thing, like as a personal
Right.
advice. So I have some friends who are very, very active on stock markets. They're like buying in the morning, selling in the evening, and they're booking a profit. And they say, "Oh wow, look how great I've done." Or
Do
sometimes
do
they
they tell you when they book a loss?
no, they don't. They don't, because it's very embarrassing when they make a loss. So that's the thing. And I've been playing the long game where I just said invest and I'll see you 2 years later. Maybe
Right.
I'll liquidate everything in that at one go.
Right.
But what do you think? What is more healthier? A long term sort of a strategy or short term?
So I think a mix of both. I think
Okay.
that long term is
When do you sell? When do you decide I want to sell this?
when I need the money. If I'm buying something
Okay.
else,
It's not like you've lost faith in that company.
hopefully not. Look, so if I've that's a different. So that I would approach a little differently. That is overall in terms of my psychology is that, say, in terms of 100 rupees or 100% of my wealth. What I try to do with it is 90% of that I try keeping it long term. That is wealth I earn per
90
year.
90%.
90% of that I try keeping it long term in terms of 1 or 2 market cycles. That's 5 years or 10 years. Have the visibility. If there's an emergency, one has to pull out, so be it. So you should also have liquidity. That is, you should be able to sell it. It shouldn't be locked in
Right.
some place, which stock markets or equities or to a large extent even fixed income FDs, you can get out of these things. You pay a
Correct.
small penalty, you can get out of it.
Correct.
But when I'm investing in it, I'm looking at 5 years, 10 years, 20 years.
Right.
That is how I'm looking at it. 10% of my money is, now where does the fun come? The entertainment. Is making or losing quickly. So I try limiting that to 10%. And that 10% can be cryptocurrency, that 10% can be, penny stocks. It can be anything which I'm going by gut. I'm a little scared, but it's only 10% of the overall money I've earned that year. I'm willing to risk it. So that over there, if I make 50x, 100x, which has never happened. I want to be very clear, it's never happened.
I would like to know the 50x,
Yes,
100x.
it's never happened. The number of times it's happened is zero. But overall, when my serious money, which is 90% of my money, is long term. I've pegged it at hopefully I'll make 12, 13%
But is it
of
because
that.
we're lucky we're in India right now? Imagine you're a Pakistani citizen, you're
Right.
playing in the Pakistani stock exchange, you're actually losing money. So
Well, that-
it's not the rule of thumb. I think for India we're mainly talking about, because
Right.
I think the equation looks good for India moving forward.
But
That's
is it easy to trade in other countries' stock markets?
Depends on the country. So if you're looking at the top 10, top 12 markets,
Yeah.
it is easy to trade. They're decently well regulated. Mind you, India and Indian stock markets, financial markets, are actually very, very safe.
Right.
So we have a very good infrastructure in terms of investor protection and things like that. A lot of the developed markets, again, you'll find that. The emerging markets, like what India was in the 90s, where you
Right,
had
right,
Harshad
right.
Mehta, and
Correct.
you had these kind of scams breaking out, is when we were a nascent market.
Yeah.
We've learnt from those, and now we
course.
moved way ahead.
Yeah.
So I would say the emerging markets, you may still have some of that which does exist, though a lot has changed because of technology. But otherwise, most of your leading countries, you do have equity as an option to
So what are the
invest in.
top global markets? out
America?
there? Of course.
America,
NASDAQ.
yeah. So America being the biggest economy, followed by China, which is there. In Europe, you have Germany. In emerging markets, so you have Germany, UK, France, which are their three biggest markets. Emerging markets, India, Brazil, Russia, even now. China has developed their number two, even though they consider themselves emerging, but they have developed. So these are typically your 8-10 markets, which, in terms of the world index, this would make around more than 85-90% of your world index. All the other markets put together, Japan, of course, I didn't name developed
Japan,
again, but all the other markets put together would be a very small portion. Majority of the action is in these frontline markets that
Right. But like
do exist.
what my question also would be like, tomorrow all of these apps are coming up that you use
Zerodha.
Zerodha and Grow.
Right.
There's, ICICI Direct and HDFC
Right,
has
right.
its own.
They're
bank,
all just
whatever.
making it easier to open an account.
Yeah.
Before it was
Easy.
a long process.
Correct. So it's so easy to open an account,
Right.
and so many people are opening.
Right.
But you can't trade on the Nasdaq with this.
So there
There are
are
a few coming up.
there are few coming up. So if
there are
I'm not
zero
mistaken,
yeah.
ICICI and Kotak, because I'm with Kotak, I would know about Kotak, HDFC as well.
Yeah.
So what these guys have done is they've tied up with brokers in America.
Right.
So if I'm not mistaken, ICICI has tied up with Interactive, which is a retail broking house over there. And I think for a subscription fee of 10,000 rupees per year,
Right.
there is a limit of $250,000 that an individual can invest
Right.
outside India or
Right.
in America. So paying the 10,000 subscription per year, you can buy stocks or mutual funds or anything.
So I
which
can
is,
invest in Apple and
yeah,
Yeah.
yeah, and even in
Okay.
India, the
Yeah.
NSE is coming with I think 8 or 10 of these most liquid tech stocks, and some of the banks, maybe some of the banks as well. I'm not very sure, but 8 to 10 big American companies now are going to be listed on the National Stock Exchange, where there will be a way to buy and sell it.
And my next question would be like, how do you think that's going to affect our market? Will it affect Reliance? Will it affect the blue chips? For us, will it make it stronger, or will it make the growth lower?
Not really. So what's happening is by listing in a market,
Yeah.
you're just giving access to. It's just a mode of buying the share.
Yes.
For example, Reliance is listed in UK via DRC.
Yeah.
Infosys, ICICI Bank, HDFC is in America as an ADR.
But
That-
what I would say is that, like,
Yeah.
for me as an Indian,
Right.
like, as a young investor, as somebody who has no
Would it take away from the pie?
yeah, not would it take away from the pie. Like, I would want to invest in Apple. Like,
Right.
when Apple gets listed, I have like 1,000 rupees. I want to invest more in Apple rather than Reliance.
Got it.
When these big companies come in, and I'm like a nascent investor, I don't know anything. That's my.
So usually what happens is, and where, so what we have to understand with India also is that in terms of what do people like doing,
Yeah.
okay? So what they do is that market has fallen, 5,000 points, or market has gone up 1,000 points, or if it's gone down, either way, I think it's a good time to buy. And then they'll go and buy a penny stock. They'll go and buy Ambika Agarbatti. It has nothing to do with the market.
Yeah.
Market is 1,000 points. Those are your top 30 stocks, weighted average, which is down 1,000 points.
Yeah.
You're buying a penny stock. That's how 90%, 99% of retail traders work.
Yeah.
Market is down. Now I have to buy. They go and buy a small cap.
Yeah.
So coming to your question that would it take away? No, because I don't think there'll be as much liquidity.
Yeah.
So the sophisticated investors
Yeah.
or investors who are aware of these companies,
Right.
like you, like the others,
Yeah.
it will interest them.
Yes.
Like for example, Standard Chartered Bank came out with a listing over here 10 years ago.
Yeah.
I don't even know if that company does 10,000 shares in India a day.
Yeah.
Very low volumes.
Yeah,
So I don't think that would, kind of take away from, would I see a lot of wealth going that route?
Yeah.
No. And the government's very smart. If that starts happening, they'll manage to curb it.
Curb it,
So I don't think that,
Because
that
Tesla
is,
coming in and it's soaring, and everybody will be like, "Oh no, we should buy Tesla stock now."
if they have an Indian listed
Yeah.
entity,
Yeah.
listed player, which none of these guys usually do,
Yeah.
they normally are all listed on the Nasdaq, especially or tech
Right,
companies.
right.
So I don't really think that them listing over here, it doesn't. Right now, everyone is very gung-ho on tech, though tech has corrected in the last 35-40%. If you're looking at Nasdaq has corrected 30% year to date.
Yeah.
So Jan to May, the index is down 30%.
Wow.
If you
That's a lot of money.
Yeah. So to put it in words, so you have Netflix, which has lost 70%.
of its value.
70% of its value.
Yeah.
6 months.
Why is that? Though?
2
Why-
quarters. So I think
They lost a lot of subscribers because it also got inflation, and people are like, I don't want to pay 700 rupees for a subscription.
Netflix is premium.
On Amazon, 100 rupees, 150
It is
rupees.
premium. Growth was very fast, and valuations were insane. People were willing to pay any amount of money for tech enablers and tech platforms.
Yes.
So Netflix, Amazon has lost like 40%. So to put 40% in dollar terms,
400 billion.
Amazon has lost close to 600-700 billion dollars. There were 2 trillion,
Yeah.
700-800 billion dollars.
Yeah.
Apple has lost 25%, 3 trillion, 750 billion.
Yeah.
So
But again,
it's
like we said, just going back, it's like mass hysteria. Oh, look, Apple, it's doing
Correct.
amazing. Let's buy
Yeah,
Apple.
exactly.
Even Elon Musk for Tesla said, I think our stock is overvalued. One of the rare people who actually said it's.
after
guy-
he probably sold it, he said.
Yeah.
Before he
So
bought
there's
it.
so many people.
He's the biggest hustler. Man.
Oh,
He's a total
he
hustler.
knows with his Twitter account. That's why he's trying to buy Twitter. It's like I can change the stock market. I can change the crypto market just with the tweet
I won't be surprised if like now Twitter plus stock, like it's like you can buy stocks and sell
Yeah,
stocks
of course. No. There's so many loopholes which people have used. Like Harshad Mehta, for example, he didn't do anything illegal. He just used the loopholes and nicely took advantage of it. And so many people.
Correct.
But
Those-
everybody does that only, not who's going to make money and wanting to get this.
The-
all of these scam
There's
artists,
so
they
many
say.
scams, like, and these scams have caused recession, which caused massive, like, wiping out of wealth. Like, we all remember in our lifetime, our generation, we've seen so much.
I also saw in a statistic recently saying that like the top 1%
Right.
have gained wealth by about 60 or 70% in COVID, while everybody else has
Yeah,
lost.
always.
Yeah.
So in terms of, I would think that in America it's even more, but even in India, where's all the wealth?
Yeah.
All the wealth is with the top 1%.
Yeah.
So if you have an asset bubble, if you have all markets doubling in a certain period, land going up
Yeah.
so much, crypto going up so much,
Yeah.
who are the guys who own it? People with money. People
that's
with money. So if you
It's
go
the flaw in capitalism, I feel. It's
Yeah.
really the flaw in capitalism
so-
because there's no way that the 1% will lose and the bottom 10% will gain. It's
Inflation.
If everyone's gaining money, these guys will gain. The 1% people will gain way more.
apart from
But
high inflationary environments. So what happens with high inflationary environments? In the short term, it's bad for
poor man.
the middle class and the poor. In the long term, and this is actually ironic, it's backed by data. It's good. So
It's good for who?
it's good for the middle class and the poor.
If there's inflation.
If there's inflation, because your wages double or your wages go up,
Okay.
anyway you don't own any asset.
Yeah.
So if the stock market comes
Like with the
crumbling
petrol
down.
price right now, it just dropped. So now some people are like, hey, I just now got my salary hiked, but
So
thanks,
it's difficult for a while. So
Yeah.
while it's happening, it's difficult. But what also it prompts, and inflation, it gives that big wage increase, which wasn't there.
Yeah.
So these guys, what you have to understand.
Inflation is the main way of Indians saying, listen, thoda pagar bagar.
But that actually brings, not only in India, across the world,
Yeah.
that is what actually leads to more equality. Because what happens is in an environment where you're just printing money for free, which is what's been happening in the last 13 years.
But it is happening, right?
But all these guys, now it's stopped. It's stopped, or at least they want to stop it. 6 months ago they announced it. Now rates have gone up. Tapering is finally happening in America, where they're actually lowering in terms of the amount that was printed. Now they're kind of pulling it back.
Wow.
So the financial bubble, which is what everyone does, talk about. Why do these financial bubbles happen? When there is liquidity flooded everywhere, it needs to find its destination. So when interest rates or FD rates, for Indians, obviously what they'll relate to is FD rates.
yeah.
Now when an FD rate is 4.5%, say if I had a client earlier who was putting 10 crores in an FD, 5 years ago he was earning 7% on that FD.
I agree, yeah.
Now when it came to 4.5, what went into his mind is 6 crores was still in the FD. 1 crore is in equity. Let's try.
Yeah.
That's what happens, because what it's forced you to do is you're just not happy with the interest that you're getting from a bank. Where do I put that money? I'm not happy with 4.5. I am forced.
Yeah.
And that is the trap. That is usually the trap. That is where people kind of lose money.
Yeah.
And then, you go to them after 3 years and say that, there is this opportunity. Don't talk to me about stock markets. I lost a lot of money.
So financial advice
So-
is stick to the 4.5%, be happy.
Over there, no, it's stick to your objectives.
Yeah.
Like, why are you investing in equity? If you're saying you're investing because I'm getting 4.5%,
Yeah.
that's a dangerous game.
Yeah.
It can, it worked beautifully for a year, but now it's not working beautifully. So,
But Revant, one question.
Right.
We've seen recessions in our lifetime. We've seen
Right.
a lot of recessions where suddenly the stock market just plummets.
right.
Which has hit you really deep down inside? One memorable recession.
So 2008,
2008,
I
I
just
think that
joined.
was everybody's, right? Like,
Yeah.
But India
so-
didn't drop that much. But
In India actually cracked. So the Sensex cracked 65%, 62, 63%.
It fell 65%?
From high to low
okay, I
in
wasn't living in
2008.
India then. Sorry,
So Jan,
Thank you, Surya.
I was 20 years old.
So
Okay.
Jan 2008 to when Lehman collapsed in September, October, The market actually fell 63-65%.
Wow.
So I joined my first company, which is an asset manager, an American asset
You're
manager.
like a
who was there
young
in
Jordan
India.
Belfort. Just started up 2008. I'm so motivated. Let's go.
So I joined in.
Crash.
I joined in 2008, which was a foreign fund house which was based in Chennai, and the assets that company was managing was 32,000 crores, and I'm talking about July 14, 2008. 3 months later, or 2 months, 3 months before 3 months of me being in the job, I see the assets at 16,000 crores,
Oh,
and my
fuck me.
boss walks up to me, obviously on a lighter note, says, "Dude, in 3 months we've halved." Like global, like all our assets. Now, what has changed in 3 months?
So what did that teach? So what did that teach you? What did that teach you?
So one is that in terms of job security, I would think that I don't know. Maybe it's being Hyderabadi, or it may come down to education. But I think what a lot of people, or at least a lot of us, have in common is we are confident. So I was never really worried about my job security or whatever else. But what I was thinking about is the career I've chosen. In terms
It's
of
volatile.
it's volatile. It's volatile
very
that
volatile.
in 3 months asset management
You
company
lost
which has,
16,000 crores.
which has been there for 12 years, which has been there for 12 years, 13 years. The day I join and it bloody halves in 3 months.
They're like, this
So-
guy.
So that
Get him out.
Undo the good luck charm.
so that did kind of teach me. And what was happening along with this is that I was also part of the 2007-8 retail frenzy which bought. So a lot what I see now, I've actually been through it in 2006-7.
Were you
So-
playing around with the derivative market and US
no, really,
housing?
not derivatives, but I was playing around with smaller companies. I was playing around with news-based inflow, like the Adanis of 2007 was Anil Ambani.
Yeah.
I'm not comparing the fate of both of them, but who knows what's going to happen? Who knows what's going to happen going forward?
Whatever happens, he will still have the end in
Oh, yeah.
Motera Stadium.
Yeah, so the banks
He's
may have
fine.
it, but
No, but like for me, I remember the 2020 crash, which is COVID, of
Right,
course.
yeah.
But the crash was such that it was people thinking this is the end of humanity.
Right.
That was the mentality because it
Right.
went from 50,000 whatever to 28,000. It just dropped such a way, and we all thought like this is just the end of humanity. It's just showing mass hysteria. If anyone wants to see what was going through in humanity in the past this decade, they just can look at the stock market and see were you optimistic or pessimistic, basically.
Correct.
Crypto guys will say that's a regular Sunday.
yeah.
So guys, they've developed a very strong gut in that.
No, again, you need to have a big heart for that kind of
To
stuff. You need to have
survive this industry, you have to be very, very like
I think you have to be
indifferent to what's happening.
I think you have to be disciplined. You have to be consistent. I think these are two things. As an investor or an advisor, I think that what's most important is consistency. That is, even to your clients, to be fair to them, you don't go to them with an idea and then 3 months later say, oh, there was a war in Ukraine, so we are screwed. Boss, what sort of an idea is it? Because
Surya
I don't.
uses that all the time though.
So I
Sorry,
don't,
I'm late.
I don't kind of, at least I don't believe that, yes, of course, like triggers, like say, for example, if there's a war going on, there is inflation, it's going to impact, equities or any high risk investment, like cryptocurrencies, equities.
Yes.
It is going to impact it because nobody wants to take a risk when there's a situation like this, expecting what's going to come forward. However, if I position it a little differently, if I say that 2000 we had, or 2020 we had COVID, let's assume our markets did go from 42,000 to 26,000. Let's assume in 2022 it was still 26, 28,000 and there was a war in Russia and Ukraine. Do you think the markets would fall? No, because it's already priced in, it's already factored in. A market looks for a trigger. When a market is overvalued, it looks for a trigger. So that can be your Ukraine war, that can be any other trigger that one
If
can
you want
imagine.
to see how India is doing, do you see the Sensex or the Nifty?
Nifty.
What's the difference?
It's a broader index. So what basically the Sensex is your top 30 companies.
30 companies.
Yes,
Okay.
in terms of free float market capitalization, or just let's say market capitalization. It's easier for everyone else. And Nifty is your top 50. So that would
Okay.
be your Sensex 30 plus the next 20.
20. Yeah.
Okay.
So the Nifty is a little more broad based, which is why that's the benchmark that that I would look at in terms of understanding.
What do you think of these IPOs coming, like LIC, for example, which is one of
Yeah.
the biggest IPOs?
What happened to that? Yeah.
Yeah, it crashed actually.
Yeah, I
As soon
know.
as the IPO came, people said, no, you've really valued it very, very high.
Yeah.
So,
Right.
but do you invest in IPOs? Do you like IPOs?
So typically, look, the good IPOs, I prefer buying it in the market because you're not going to get enough of an allotment for the good ones. And I prefer, seeing the listing and figuring out how much I want to put. That's also because of a concept that I call sizing. That is, say if you have a portfolio of, 4, 5 stocks or 10 stocks, back your ideas with decent amount of money. So what happens in an IPO is you get 10,000 rupees. You invest for 1 lakh, you get 10,000. Even if it goes up 10 times, you made 1 lakh. That doesn't move the needle. So when you can really buy stocks, like say for example, a stock that I'm monitoring right now is Nykaa. So please read up about it. I'm not advising.
I've heard a lot about it actually.
Right,
Yeah.
right.
And
So-
this lady, I've forgotten her name.
Right, the promoter.
The promoter. She's actually doing a really good job. That's the
Correct.
yeah.
So again, so that's Nykaa, for example, had a crazy listing, went up to 2,600, 1,400 now. Now I would kind of look at it because I want to have a bigger bet in it. Obviously, way lower levels than what it is today. But I could start nibbling in. If it falls another 20-25%, I'll start buying over there. Eventually, I want it to
So
be one
you're
of my
waiting
big
for the
bets.
market to basically beat up the stock and show its actual valuation rather than
It's actually,
the IPO
in
hype.
my opinion, it's quite close to its fair value. But like what you said, that, the markets, the other thing you have to understand is it's never fairly valued. It's either
How
overvalued
can
or
it be?
undervalued.
How can it
It's
be
public
fairly-
perception.
Yeah, it
Yeah.
cannot be fairly valued.
It can,
right?
it very, very rarely.
Yeah.
So you'll have a cup. So ironically, in my opinion, the day the market was fairly valued in India was March 23rd, the day of the lockdown, when we were at 26,000. We were probably 10% undervalued. But we were
That was
so
actual, yeah,
expensive.
yeah.
That's an
We
actual.
were so expensive
I think
before
right
that.
now that gross rate.
But that's how they're going to, anybody is going to make any money, right? Like, I mean, once you grossly overvalue it,
Right.
and that's the only time that you're going to get, because that's the valuation game, and the valuation
So
game.
what I tell people, again on a lighter note, what I tell people when they ask me that, so I'll tell you two things. The first thing I'll tell you is when people come up to me and I'm in the office, they say that, Revant, tell me a stock which will double. I've been hearing it for long. So initially I used to just laugh it off. Then I said no. I said, yeah, I know a stock which will double, but from which level it will double, I don't know. Like it's $10, it can go to 2 rupees and then 4 rupees. That's also doubling. So that's one. That from which level it'll double, because a lot of people ask it. The second kind of person, and this is what I believe to a certain extent, is they ask, how do you make money? That is one question which always comes up. To which I say that, in my opinion, there are 3 important things which I follow in order what gives you the best chance of making money or how.
Yeah.
One, you have to be a good person. So a lot of it, actually, or at least some of it, dude, now if you're an unlucky guy,
Yeah.
it can be the best idea, it can be the best time,
But wrong.
you are just bloody that unlucky
Yeah.
that it won't work. So now you have to be a good person. Some luck will also come your way. Be good to your family, staff, wife. Do all that. One is good
karma.
person.
Number 2.
Not even karma. Just be a normal good person.
Number
Don't,
2.
Yeah. So number 2 is that identify an idea which you feel is valuable. That is, today if I were to look at it or give you an example of ideas I think that are good, public sector, PSUs,
Yeah.
infrastructure. These are ideas which for the last 13 years haven't worked.
Okay.
Larsen and Toubro, which represents infrastructure,
Yeah.
in the last 13 years, 2008 to now, it's moved nowhere, that company. Don't go and buy it.
And lastly, number
But-
3.
Don't be with the crowd. So as long as you are,
No herd mentality.
yes. So do something different from what everyone else is doing.
Okay.
So that would actually feed into point 2, that, a good idea, which not too many people are doing. And in terms of how that would work out, in my opinion, that's the only way that, one can realistically make money. Be a good person. Don't do what others are
Sounding
doing.
like my mom. Man.
And lastly, the most important part, when you have the first 2, invest big money.
Uh,
Don't look at something, say wait, and then, say, oh, I invested.
Yeah.
I only invested like nothing.
go hard or go home.